The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off on CPI Tuesday. Some inflation data pretty much comes in line, and we have markets rejoicing as no surprises mean that we are on a path to rate cuts. That's basically the consensus right now. There are pockets where there are inflation. Core inflation up from 0.2 to 0.3, okay? And so the cases can be made that can be made prior to these numbers, and we get into the numbers, and let's kick it off with the headlines as we have markets higher. Fastest pace since January on services, okay? So the number comes in, core 0.3%. That was 0.2% last month. CPI 0.2% in line. Core CPI 3.1%. The number was 3%. Services, excluding energy, up 0.4%, the most since the start of the year. That was led by the biggest jump in airfares, which was a big number. There's little pockets here and there. But nonetheless, the market, if you're getting numbers like this and we're getting the jobs numbers that we're getting cuts. And that's how it's reacting today. Outside of some outsized inflation, okay, the risks right now, I think when you talk to the Fed, are that we have more risk to the side of employment than is to the side of inflation. That could change. But yes, nonetheless, markets rejoicing. We're giving it up a bit. It's going to be an interesting day. Markets react right on that 830 number. We drive to 64.42. We've given up about 20 points, but S&P's up by 0.4%. NASDAQ 100 up a similar 0.4% right now, 23,739. Dow up 0.4%. You see all the markets accelerating higher. Those gains have waned a bit, but positive territory everywhere right now. And the Russell, how about the Russell, right? Up to 2261. We're back to 2240. The Russell particularly volatile. Ethereum, another lift to 4413. Bitcoin slightly in the red this morning at 119,000. How about crude prices, man? $63.47 for a gallon of crude. Now, let's jump to yields, the dollar, and gold. So right now, there we go. We're looking at a 10-year. You see the spike instantly to higher price, lower yield. We're still talking about a yield at about 4.27. Okay, so no real move in yields. We're right where we were yesterday afternoon. You do get a spike, though, from where we were. So the market's saying an even greater chance that they will get a cut in the September meeting. So we have higher price, lower yield. A lower yield is going to weaken the dollar, right? You have a weak dollar, back to 98.20. We're at 98.36, and this is going to be the pressure on the markets as we come into a Fed cutting cycle. You're going to have lower yields. You're going to have a weaker dollar. But gold doesn't catch a pop, right? Look at this, folks. No reaction whatsoever right now as we have yields dropping. You have dollar weakness. And yes, okay, you did get a pop from 33.89 all the way up to 34.05. Folks, this market's right where we were at 6:30 in the morning. No pop in gold whatsoever as gold is digesting some of this acceleration. And I think you might be making a run to this 3,200 price point. Doesn't quite add up, but this is how markets digest sometimes. You have a consolidation going on right now, and gold is digesting those gains. Yeah, it's just that simple, man. You've done a one-to-one, A to B, C to D. You started this run at about $2,000 in February of last year, and you've been chopping around near about 3,400, which is where we completed that one-to-one for the better part of almost 4 months now, but always a little bit revealing, right? In another day, in another time, in another life, folks, you get news like this, you get market reaction like this, right? And the market says, oh man, this is it. Inflation data is right in line. The Fed's going to be cutting in September. We're going to have lower yields. We're going to have a weaker dollar. That would give gold a boost. No boost whatsoever today. The only boost on this chart is the fake news from last week. Since then, it's been lower price, and we are now well below where we were coming into that fake news of tariffs on gold. All right, let's get into some of the CPI data. So we talked about the headline numbers. Okay, CPI month over month, 0.2%. On a yearly basis, 2.7. Core, a little bit hotter at 0.3 and 3.1. Services, as I mentioned, was a big component. Super core services, which at one time was a big focus of the Fed, how about up almost 0.5% last month? 0.5%. Yeah, 0.48% last month alone, the biggest gain since January, and the second biggest in the last 16 months. We've rarely seen a jump lately in that super core services. Now, where are tariffs surfacing? And there's so much volatility, all right? And that's one thing that, statistics are great. You got to understand variance to a certain degree, okay? You got to understand sample size, right? There's a lot of variance in many categories of tariffs. You have areas where you'd expect inflation, but guess what? Maybe there was hot pockets of inflation in the last month or two, and now you're getting ebbs and flows in certain areas. Furniture and bedding rose by 0.9%. Bedroom furniture, 1.5%. Appliances, though, down 0.9%. Major appliances down by 2.2%. Apparel, barely higher. Men's shirts and sweaters actually down 2.6%. Women's dresses up by 2.7%. Just an example, as they say, right? But if you're trying to make calculations on a 30-day basis, what's happening to apparel right now? Folks, there's no rhyme or reason why shirts and sweaters for guys are down by 2.6% and women's dresses are up by 2.7%. Okay? Yeah, there's a lot in here for everybody when you get that type of variance on a 30-day basis, but super core services running a little bit hot. But apparel up just 0.1% on the month, the smallest since May. Video and audio products, 0.8% on a monthly rise, the smallest rise since May. On a year-on-year basis, 0.4%. Doesn't sound like much, but that's actually the most since 2021. Household furnishings, 0.7%. A little bit of a slowdown. Yeah, and then airfares up 4% on the month. They were down by 0.1% in June. Motor insurance, how about 5.3%? Medical care services up 0.8%. Always remarkable. Just so much variance in different aspects. But nonetheless, what do you get? You get data that pretty much comes in line, and the market says, well, if you're in line, we've already made a decision that we are coming for the cuts. Now, we'll see if that can keep this market higher this morning. Doesn't mean that equities have to trade higher. Now, right now, folks, we had about yesterday a 88-90% chance of a cut. Now the market's pricing in 94%. You take out one more variable, okay, and we still get a whole other jobs report for the month of August before the September meeting. You have the PCE, which we get in a few weeks, which the Fed prefers. But yeah, the market's saying, you know what, we've made our decision for September. We're at 94%. And where are we at December? Well, we pulled this up yesterday. There's greater than a 50% chance, folks, right now that we're going cut. 3 cuts for the final 3 meetings, 55% chance. Stay tuned, folks. We'll come back. We'll talk some markets. We'll talk some equities. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have equities about 12 minutes away from the opening bell, and we are pushing right near those record highs. S&P's right now up by about 24 points right now. We're trading at 64.23. You have a high out there of 64.68 right now, and this morning we hit a high of 64.42. Yes, you're talking about only 26 points away. NASDAQ 100, we're up by 100 points right now. Keep an eye on yields. Boy, a total give back. Now, we got the 10-year right now at 4.25% about, folks. All right, let me pull up exactly where we're at right now. 4.28, okay? So yields actually higher than when they were yesterday when I was notating that chart. And the point being, do not expect yields to plummet right now. Okay, the market where the 10-year is right now, all right, we'll jump over the 2-year at the same time. Okay, there's your 2-year. We get a huge acceleration on the jobs number. We've given back some since then. The market right now is already pricing in a 55% chance that we are getting 3 cuts in the next 3 meetings. That is already priced in, 55%. Now, it's not 100%, okay? This market will move. But that's important to understand. Do not expect this 10-year to drop to 3.5% when we get 3 cuts, folks, okay? That's not what's happening here. There's going to be some inflation. The Fed has some room where we are right now. And yes, if the weakness persists on the jobs number, you better believe they're going to bring it cut. Okay, and then you may see that. But this market's still going to react to the future, and the future is not the next meeting to 2 to 3. Okay, that's baked in right now. And maybe you get a little bit of an easing in mortgage rates as we come down on that level as well, as in mortgage rates pushing almost 7% still. If you ever get that number back down to a 6, boy, if you start getting mortgages in a 5 handle, folks, watch out for that real estate market. Okay, and that's the worry in the Fed, though, is that, man, I was joking with somebody in the real estate market recently, struggling with Besser Behuli, Tiger Real Estate, give him a call. And we were joking, and could you imagine, Trump's calling for 2%, 200 basis point cut, right? And that's not going to happen, okay? Don't take them literally, right? That's what they say until it happens. But what they say is, so he says, folks, if you ever got 200 basis points, I think every house would go up by $200,000 overnight, right? Could you imagine if the mortgage rate went from like 6.8 to 4.8? Can you imagine that? What people would be willing to pay instantly for the same house they were, because it would be the same exact payment as what they were paying for a 6.8% mortgage, right? If you're willing to pay a $3,400 monthly payment, you're paying 6.8%, you can afford a house worth X dollars. If you're willing to pay that same payment and mortgages drop to 4.8%, that payment can buy you a house that's approximately $150,000 to $200,000 more. That's going to be some of the stimulative effect that's going to come into the equation when it comes to the Fed hesitating a bit. Now, I only say that in terms of hesitating a bit as long as the economy is holding up well. We really get a rollover on the jobs, and yeah, you better believe you're going to see those yields tank, but that's not going to save the market at that point. If you're looking for equities, yeah, look at that give back, okay? Pay attention to that bond market, folks. The bond market knows the cuts are coming. It's already priced in. We're at 4.25%, and there you go. Whew. All right, we jump back to that gold chart. Yeah, gold very telling as well. Can't catch a bid on gold. Almost at the session lows right now. We're at 33.94. You jump over to silver right now. Down about 5 pennies for silver. We'll check in on some of the metals. Copper right now. There's a bid for you, copper, up to 451. Take a look at some of the copper stocks. They've been in some tough go-around. You take a look at Freeport-McMoRan. Yeah, take a look at this even longer term. Yeah, check out all that selling the week of July 28th on Freeport-McMoRan. That's going to be a problem for that equity. Top out at about 45. Then you go to Southern Copper as well. Compared to some of the other metal companies, look at that selling, right, on their earnings. This is price and volume, right? How about this price and volume for you? Let's back it up. On a weekly basis, July 28th, you drive down, you catch a bid last week on 5.4 million shares versus 13.1 on the way down. You got volume off the top as well on this one. These copper stocks. Then you take a look at copper itself. Can't find a bid since it fell out of bed with tariffs. All right, we take a look at some of the equities that are moving today. You jump over to Apple shares. So Elon's out there tweeting at Apple, saying that he's going to sue them. He's almost a caricature of himself at this point. He feels like Apple is discriminating against the richest man in the world. Because the plight of the richest man in the world, how does he do it, folks? Apple is discriminating against Elon and his companies X and Grok. And his claim is that they're siding with OpenAI, which is a partner with Microsoft in some capacity. I mean, I don't even get the logic of why, Apple's in the business of, anyway, I don't even get the logic sometimes. But nonetheless, you had Apple reacting a little bit overnight. You catch a bid with the rest of the market right now, but I wouldn't be too worried about that one. All right, we jump around to some of the chip stocks that were rocking yesterday. NVIDIA shares slightly in the green right now, 182.82. You jump over to AMD shares. Same thing, slightly in the green right now. Intel, quite a pop higher yesterday, and you're going to do it again today. Up by another almost 3 to 4% right now with Intel pushing 21.35. We check out some of the other equities. Yeah, how about this one, right? So Circle Internet Group. Now this is stable coins, okay? Let's pull this one over. Now, this company, what do you go back to? Yeah, they've been out since June. So they go IPO in June. Okay, and this is stable coins. You run up to 300, right? They got volume at the top, man. Okay, they got volume at the top. You're going to open at 185 right now on their numbers. Look at that acceleration, man. And this is all built on the future of stablecoins, folks. Okay. So, Circle shares. Second quarter revenue jumps 53%. Strong stablecoin growth. 53% increase in revenue. What do I always say? Percentage increases on small numbers can be deceiving. Okay, they're dealing with some small numbers, but maybe not for long. That's what they're telling the public. And how about this one? They got a net loss of almost $500 million. Okay, from earnings of $32 million. And why is that there? Because they had to do all these IPO costs, and they had to recalibrate the fair value of their convertible debt. We'll talk a little bit more. We'll come back for the opening bell, folks. Don't go away.
Skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Going to be an interesting day to see how this market digests. Inflation data, pretty much in line, although some pockets could be showing a little bit of rise. nothing that's going to spook the Fed where we are right now, though, in terms of the jobs. You got to take them both. They got two mandates, right? Full employment, price stability. Those are always at odds to a certain degree, and the Fed is always calculating where they think the risk lies. And right now, they think the risk lies in the job market. They're keeping track of the inflation, but they're worried about the job market. That shift took place a while ago, but for a very long period of time, they were not worried about that job market at all. They were worried about price stability. The risks lied on that side of the equation. That's not the case anymore. Okay, when you get that jobs data, and we're talking about a 3-month average of 35,000 jobs, and we'll see when the next line comes down, and you got a new head of the BLS that was running and working with the Heritage Foundation. We'll see if he's going to change how that data is collected, and if the market's going to trust it to the same degree. That's in focus, man. BLS head got fired. You have a new person in there. They had worked at the Heritage Foundation, basically a Republican conservative think tank. We'll see how that new calculation, right? They're going to recalculate how they calculate the jobs, folks. We'll see how that comes out. But in focus right now, this market, yeah, cut is how the market is pricing it. All right, back to Circle. So, up 16% right now. And yeah. So, this company, check this out. They have the loss that mostly has to do with IPO-related charges, okay, for stock-based compensation and $167 million to adjust the value of their convertible debt. The circulation of their stablecoin grew 90% from the previous year to $61.3 billion, okay? That's the circulation of their stablecoin, $61.3 billion. They have a new blockchain called ARC that they're coming out with, designed to be a network for stablecoin payments, FX, and capital market applications. Yeah, it's coming, folks, okay? They were one of the earliest companies in the crypto industry and the issuer of US dollar coin, USDC. It's the second largest, and it makes up 26% of the dollar-backed stablecoin market. The number one player there is Tether's USDT, which makes up about 67%. So between the two of them, you're talking about 93%. Sounds like monopolistic to me, okay? And yeah, you should be able to send these types of payments, folks. I've told the story before, okay, the experience before. I was playing poker in like 20... had to be 20. I got to pull up when I was doing it again. It was like 2015, 2016. And think about it. Right now, if you want to send somebody money, okay, even when I'm using Venmo, which is free, okay, it takes 2 to 3 days, right? So I collect rent in Venmo, then I'll send it from Venmo to my own bank account, right? All of that's completely free, but it takes time to get it in and out of Venmo. Compare that to 10 years ago almost. I was playing online poker, okay, unregulated offshore sites. Talk about risk reward, okay? Basically, always your money is 100% at risk. It might go to zero if you're ever doing anything like that, folks. If you're ever sending anybody money, especially an offshore, unregulated poker site, you better imagine that that money's gone. Okay, that's one of the risks. My stop loss on that was always that it could go to zero instantly. And I planned for that. That was a risk, and the odds of that happening were far greater than 0%, okay? But guess what? Risk reward, I calculated the risk. It was still a positive expectation deal. Point being, I was able to get money by buying Bitcoin on Coinbase. I would send that money from Coinbase to the online poker site, and then they would turn it right back into US dollars. And it happened in the span of minutes. That was 10 years ago. There's no reason. This is going to come. It's coming everywhere. Okay? The crypto is going to be able to do that. So, yes, it is a real deal, man. And this is their CEO talking for Circle. And I really haven't followed this company a lot, but it is moving that quickly, folks. And shame on me when I did that 10 years ago. I should have loaded up on Bitcoin, man. Because I remember calling my dad at the time, or maybe the next day when I walked in, and telling him it blew my mind. I could not believe that it facilitated that financial transaction in minutes. Minutes. I said, I couldn't believe it, man. I put money onto Coinbase, shipped my Bitcoin to another Bitcoin wallet. They verified it, turned it back into dollars, and I had money in an online virtual poker site that was based in Costa Rica, I think, within minutes. I said, this is amazing. And yeah, here we are 10 years later, and now it's finally going to ratchet up. Since our IPO and since the Genius Act passed, the number of major financial institutions that are engaging with us in banking, payments, capital markets, in so many categories has surged. Anecdotal, but nonetheless, it's happening. We're seeing this incredible interest in working with us, including from some of the names that people have thrown out there as maybe doing their own thing by perhaps launching their own stable coins. Is everyone going to have a stable coin? That's the last part I wanted to get to. Yeah. Now, they're going to lose over $500 million, but a lot of that having to do with the costs of pushing out paper to their own employees, with stock compensation, IPO charges, and that debt. All right, what else we got going on? Yes, so this is the gentleman that's going to be running the BLS. He's been a heavy critic of the agency, and he's going to transform the way that that data is collected and disseminated. And we'll see. We'll see how that data comes. Yeah, we're talking about NVIDIA. Talked about the... Yeah, this one's interesting, okay? And you see the lead here on the Journal, okay? Meet the parents raising carnivore babies, swapping pureed fruit for ribeye. And it just makes me think, folks, everything's always... You don't have to go too far in one way or the other, right? It's like, you know, you can be healthy without feeding your baby straight ribeyes out of the womb, okay? It's like everything is so far to the extremes right now, okay? Yes, protein, meat, all that stuff, super healthy. But guess what? You don't have to deprive your baby of bananas and pureed fruit as they're starting to be. You have to, I mean, it's you see it happening, though. They got carnivore babies, man. Most of the diet, meat, along with other animal source foods, eggs and butter, okay? And yeah, in general, folks, fruits, vegetables, right? Lean meats, all that stuff. But you better be careful of this stuff, and everybody goes so far. It's like, you know, the truth is always somewhere in between, right? These are great. These are phrases I live in. The truth is always somewhere in between, okay? Context is everything. And I say the truth is always somewhere in between, as in, you know, you get both sides screaming from hell in a hand water everywhere, left and right. And the truth's always usually somewhere in between, okay? Yeah. As somebody that, listen, you know, my family used to joke about chicken and Brussels, man. Chicken and Brussels sprouts. Some good avocado in there, all that stuff. Now, I eat way too many treats, as I should not do as well. But yeah, babies, come on. A little fruit. Fruit is healthy too, folks. You know, fruit, eat as much fruit as you want. Nobody's ever been unhealthy from eating too much fruit. This market, we're pushing highs. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have markets testing the highs right now of the session. S&P's back up 37 points. We're trading at 64.36 right now, within a few points of that opening on that acceleration on the CPI numbers this morning. Made it up to 64.42, and we're only about 20 points, 30 points away from all-time highs. NASDAQ 100 right back at the price level as well. 23,800 on the dot as we speak. Yeah, only 45 points away from all-time highs. And the Dow up by 257. We jump around some of the leaders in this market. Apple up 0.5% right now. Amazon up 0.5% right now. You jump over to NVIDIA, slightly in the green. AMD as well, slightly in the green. Some of the other tech companies, there you go. Google shares up by 1.4%. So look at this. And this is where, if you're looking for a short-term technical area where Google may face some resistance, this is it, folks. Okay, you just completed a 1-to-1, A to B, C to D. You're right back up to the highs earlier in the year. Now you gap lower on their earnings in February. We take a look at Google. At the highs in June, you do 32.9 million shares. You hit a high of 182.45. Yeah, look at how, you make that high up there with some big volume June 10th, okay? And I don't even have to tell you, that's almost 33 million shares, okay? You do 31 million shares. No, these are daily, excuse me. June 10th, you do 32 million shares. You do 31 million shares, okay, but look at how we climb on 20, 23. We don't get above there with volume on a daily. You don't do it. The only volume we've had on a daily was the rip-roaring selling, and even since then, right, you sell on 45 million shares July 24th. That was following their earnings, and since then, declining volume numbers. That was a nice sign of strength. Is that Friday? Yeah, Friday had a nice sign of strength. It did, but today we're getting above it, and we'll see how the volume goes. Let's put it on a weekly. All right, so look, we're coming into the highs on their earnings in February. You did 139 million shares on the weekly. It'd be hard-pressed unless we get some crazy action in the markets to do that type of action. So Google, maybe bumping up against a little resistance right now, and it would make sense when you go from 142 to 203 in the span of almost 4 months, and we're pushing the highs of this year. All right, and what else do we have going on? Well, today's an awesome day. We got some market action, folks, and if you're looking for an education, Man, one of the best educators out there is our man Basil Chapman. He's coming up next with the Tiger Technicians Hour, folks. But if you want a deep dive tonight, 90 minutes live with our man Basil Chapman, identifying trend changes and what action to take. Folks, if you've never attended a Basil Chapman webinar, check it out tonight. Head on over, sign up for the opening call, okay? And even if you have, great time to sign back up and check it out. All subscriptions to TFNN come with a 30-day money-back guarantee. You can sign up for a month for $149 if you're thinking about staying on, and I encourage you to do so. You can sign up for 6 months for $695. You save almost $200 or 22%. Or you can sign up for a year for $1195. You save $593 or about a third off the total price. All of those come with a 30-day money-back guarantee, folks. So if you're really thinking about staying on, I encourage you to check out the long ones. It still gives you 30 days to figure out if you're going to stay on. And he's going to be talking about the Chapman Wave technical tools that help identify trends and trend changes. We are on quite a trend right now, right? And it's not stopping just yet, folks. You talk about a trend. I mean, I just showed you, right? We're within points of S&P, NASDAQ, all-time highs across the board. Sector rotation and stock selection. Basil does a great job talking about sector rotation. Trading around core positions, using money management to maintain your capital, and being in there live with Basil. He takes those questions live as they come up. That will be archived, so if you can't attend all 90 minutes, it'll be accessible for subscribers, and all you got to do is check out the opening call, and you gain access to the newsletter for 30 days. Basil puts out outstanding updates every morning. He usually sends out a video on Saturdays that's like an hour long, folks. It's an outstanding education. You get many archive webinars as well. Okay, when you sign up, you gain all these archive webinars. Okay, stock sectors and techniques to focus on, dressing up the charts in the Chapman Wave. Okay, some of them are timely, but some of them are just evergreen, that you can go in here, you can pick up many of the patterns that Basil's working with, and you get the live event tonight. So check it out, folks. Basil Chapman, he's ready, he's raring to go, and he'll be in there for 90 minutes, and he's an outstanding educator, folks. So check that out. Coming up at 4 o'clock today, right after the afternoon program, and I'll be doing live 3 to 4, and Basil will be up live from 4 till 5:30 for his subscribers at the opening call. All right, check back in on Circle, up by about $15 or 9.7% right now as the market holds the gains. Jump back to gold, just under 3,400 right now, 33.98 in gold. Excuse me, yields. Got to take that one off as we move around. We're a little bit above there. We're pushing 4.28, maybe 4.29 right now on the 10-year. So always interesting on days like this, right? So what I do is I look around. I say, okay, if this is where the market's going, which is inflation data is pretty much in line, jobs data is driving the Fed right now. Okay, the fears are about the jobs market. The fear is not about inflation right now. That could change, but right now it's not. Okay, these inflation numbers are close enough to being in line that where the jobs numbers are. But look at the move. So what happened this morning? Yields, no movement. We're right back to where we were at 8:30. Okay, the 10-year, right back to where we were. But guess what? The dollar says, no, we're weak. Can't find any recoil in this dollar. You saw yields drop initially, but rebound. But the dollar has dropped, and there's no rebound. Okay, the dollar is going to face some heat to the downside, and if you're looking for gold to get a dramatic boost, that's probably not in the cards right now. That's just how the relationships are working out right now. Okay, yields are priced in, dollar is facing weakness, and gold is consolidating to digest the gains. And that's where this market is until it changes. And with that in mind, we just got a little selling on that S&P, man. Look at that selling. And we did it on volume on a 5-minute basis. You jump to a 15. We just started that bar 4 minutes ago. And we're breaking the lows of the session right now. Put it back to a 5-minute. All right. So we just broke the lows with volume on a 5-minute basis. We're coming into this acceleration from 8:30. Ooh, NASDAQ just gave it up as well. Look at that. Oh, boy. Okay. I say, oh, boy. And Amazon just dropped $5 from the open, folks. Maybe 4. Yeah, $4 from the open. Apple, Microsoft down about $3 from the open. All right, someone's selling. Google giving up almost $3. Look at the give up on NVIDIA. From almost 184 to 180.74. Jump around to some of the others. Disney shares flat right now. P-Sky up 2.8%. I'm going to look at that one, I'm telling you. I think that deal they made with UFC, it's brilliant, man. $7.7 billion for 7 years. Man, everyone's going to be signing up every single month for those pay-per-views when they're not pay-per-views. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So Paramount Skydance, which is just Paramount, the new one, but the symbol is P-Sky. Okay, you're up by 3.1%. Just taking a look at this, all right? Now, TKO, which is the parent company of the UFC, they're valued at $14.8 billion, okay? And, yeah, they got quite a product, man. You're going to get, they just signed, imagine, they just signed a $7.7 billion deal, right, for 7 years to push out their product, among many others. TKO, they have the UFC, okay? Yeah. Now, you get into P-Sky. Now, Skydance originally purchased Paramount for $8 billion. Right now, the market cap of this company is $7 billion. Okay, we've dipped a bit. You start off near 1150, shoot up to 1279. We're trading lower, but let me tell you, folks, okay? Now, this is completely nothing to do with technicals, okay? But as somebody that had cut the cord a while ago and loves sports and loves competition, right, of almost anything, I can't wait to watch UFC. I can't wait. It was not something I was never willing to do on a pay-per-view basis. But I constantly find myself signing up on live sports. I'll give you a great example. A year ago for the Kentucky Derby, not the Derby we just had, a year ago, I signed up for Peacock the day of the Kentucky Derby because I wanted to watch the Derby. It was on NBC. So what did I do? I signed up for Peacock. Well, guess what? A year later, it renewed my Peacock annual subscription, even though Peacock is very distant in terms of how many I watch. It's very cheap as well. They just want to serve me ads. And that's what's going to go on here, folks, as well, okay? They're going to get so many signups, man. When you can sign up for $12 for a month and people are used to paying pay-per-view prices, there's nothing like the fear of missing out for live sports. Nothing like it. You know, new shows launch on Netflix. I'll sign up next week when I'm ready to start watching it, right? Nothing like it. They got CBS. They're going to have the NFL in there, and they're going to have UFC, and I would look at that piece guy. All right, markets giving it up a bit. We just dipped down to 64.10. Markets in the green, digesting CPI. Folks, don't forget about Basil. Tonight, he's coming up right now. While you're waiting for him, head on over to the front page at TFNN and check it out. And we'll see you live for his webinar at 4 o'clock. And I'll see you at 3 o'clock for the Tom O'Brien Show. Have a great one, folks.